Hi folks, Lee Gettess here with the Market Sense for the week of May 29th, 2018. Hope everybody had a good Memorial Day weekend. The charts in this presentation are provided to us by Gettess in their Trade Navigator software. And in looking at a weekly bond market chart here, we said last week we thought they might not want to go down and perhaps go up. Didn't really expect it to be this violent all of a sudden, but we had developments from Italy over the weekend and possible European currency crisis. The thing to understand is there is no crisis, there's only the fear of one, and it occurred over a holiday weekend, so yeah, it's a little bit exacerbated because of that. We were looking both at the, I'm sorry, I've kind of lost control of my cursor here. We were looking for the mid-Keltner channel right in this area, which is about 144.05. We were looking at that as potential resistance this weekend. Clearly that hasn't made any difference. They've just blown right through that. The next upside target, this previous high in the September contract is 146.08. That's the only thing you can find up there is the next logical thing. Because of the obvious nature of this, it wouldn't shock me if they have a big rebound back down. So down here to this middle moving average, 141.22 in the September contract, it wouldn't be shocking if they dropped back like that. Because they kind of looked like they wanted to go up, I don't think they will, but I just won't be too broken up if they do. This much volatility and this far out of line, there's not much we can do with them at this point, though. And stocks have a much different situation. We had a couple little small range weeks, so breaking out of that is often a significant development, and 26.85 was kind of the breakdown point right here, which they did break down through, but then went back and closed up above. This would be a lot more significant, except we've got this range from March to April here that everything since then has stayed inside of. And if you go back to January, February, the whole rest of the year has stayed inside of that. So this little breakdown, you got to remember it's within these bigger cone-shaped things that aren't breaking down. Could be the start of something, but not necessarily. We need a major move before we can be excited about a breakout, I'm afraid. The 26.85 area there, if that holds and knocks them back up, we could probably be looking at, I don't know, 27.50 or so. If they take that out, that would be one heck of a reversal. To fake to the outside, and believe me, breakouts are very, very common to fake one way and then go the other, the first break being false. They've already broken down, and if that's false and they take out 27.50, boy, they could be up testing the highs really, really quickly. That would be a breakout I'd be willing to take. At this point, I think there is still a risk of them dropping lower. Hard to tell exactly what the developments will be in Italy and the rest of Europe. But again, let me remind you, it's just fear. Nothing has happened yet. It's just the fear that something might. And moves that occur for obvious news are just not as impressive to me. So that's what we've got for you today. I hope you can find something